Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we have quite a bit to talk about. It's been a while since we did our last dubious speculation video. In these videos, I tend to go through the market, as in depth as I really can. And I like to take my time and go through the different ways to look at the market so that everyone knows, the different variables that could affect things here in the short term. Now, to get everyone up to speed with how Bitcoin arrived at the current level, one of the things that we talked about basically for the entire year was that Bitcoin would likely go through a painful bleed that would last about 6 to 9 months, at which point the bull market should theoretically resume. Now, the reason that I said that, of course, was because of USDT dominance hitting its long-term trend line. We'll talk about that in the video too. And also gold breaking out, which is what also marked the quote-unquote mid-cycle top in 2019, right? If you overlay gold, you'll see a lot of the stuff is playing out in almost the exact same way, right? You go look at gold, you identify where it broke out in 2019. That marked a mid-cycle top. And from that time, it took Bitcoin about 30 weeks to break out from that mid-cycle top, about 30 weeks or so. And we just simply suggested, hey, what if this time is not different and the breakout by gold marks another mid-cycle top for Bitcoin at 73K? Not a market cycle top, but a mid-cycle top. And what if it takes about the same amount of time to break out? That would put it at about 30 weeks or so. And you can see it basically took around 30 weeks from when the mid-cycle top was put in. So a lot of that stuff has played out in a very similar fashion. We said 6 to 9 months. 6 months would basically get you to September, which is essentially what happened. 9 months was in case it continued beyond that, which is always a possibility to keep in the back of our mind. But in the short term, right, at least that's how we got here, right? That's how we got here. And one of the interesting things that you should be aware of is that Bitcoin has really been very responsive to the labor market this year. And if you're wondering why Bitcoin has kind of hesitated here for the last couple of weeks, it's been doing the same thing essentially all year long. And what I'm talking about is it gets a move up, right? It'll find some type of a move up sort of early part of the month to the mid part of the month. And then it will stall out until the labor market data is released. Okay? Now, if you look at a lot of these prior moves by Bitcoin that marked local tops in 2024, you'll find April 2024, you'll find June, and then you'll find late July, early August. But what you'll notice is that every single time that Bitcoin put in a lower high, it was just after or just around the time of the labor market release that occurs at the beginning of the month. We also saw something similar over here going into late October or mid-October. Bitcoin had a push higher, and then it paused for a couple of weeks. We said that was the most likely outcome and that it would likely wait until early November to make a decision. We put out a video called Bitcoin Decision Time. And what I said in that video was that if the labor market data comes in okay, then it's likely that Bitcoin continues its rally and follows the cyclical view. And we'll talk more about that. Now, what actually happened in November? If you overlay the unemployment rate, what you'll notice is that all of these lower highs by Bitcoin were occurring, right? They were all occurring while the unemployment rate was starting to accelerate to the upside, right? If you look at the unemployment rate, the lower highs came in once the unemployment rate really started to move up quickly. Okay. This slower move by the unemployment rate, Bitcoin didn't really care as much about. It was when it started to accelerate 0.1% essentially every month that Bitcoin started to pay attention. But what I said a month ago, and you can go back and watch the video, it was called Decision Time, I believe. What I said, if the unemployment rate comes in at either 4% or 4.1%, meaning it's as long as it's not going up, then Bitcoin should follow its cyclical view. Now, the cyclical view of Bitcoin is essentially twofold. It's first of all the year-to-date ROI of Bitcoin in halving years, right? You compare 2024 to 2016, 2012, and 2020. Normally, Bitcoin goes up in Q4 of halving years, right? So if Bitcoin was going to follow the cyclical view, then it would mean going up in Q4 of the halving year. And if you average out all prior halving years, you can see that they really start to pick up in Q4. If you overlay 2024 with it, you can see that it's essentially the year-to-date ROI of Bitcoin in 2024 nearly matches the average of all prior halving years. What's more interesting, though, is that this 2024 year-to-date ROI most closely matches 2023, just a slightly diminished version of it. You can see that for most of the year, the return on investment of Bitcoin in 2024 has been slightly lower than what Bitcoin experienced in 2023, except for very early on. It briefly went above it, but for the most part, it's just been slightly below where it was in 2023. Now, if Bitcoin is to continue to follow the cyclical view, then it could get one more push higher before the end of the year. If you look at it compared to 2020, though, you'll see also it would favor another push higher, just like 2012. The counterpoint is that a lot of people have made comparisons to 2016 in 2024. In fact, there are a lot of similarities. You have the same president-elect, right? Trump is going to be taking office. You have a rally by the dollar. You have a rally by the long end of the yield curve, all happening in Q4. This all happened in Q4 2016 as well. And at the same time, Bitcoin's been following typically what it did in 2016. I guess the one thing to note is that the ROI of Bitcoin in 2024 already matched what it hit in 2016. So that might be sort of a slightly negative point to at least keep in mind, showing you that there's obviously no guarantees. And in early 2017, Bitcoin actually had a little push up and then it had a correction. We'll talk a little bit about that in a little bit as well. So that is essentially the cyclical view from a halving year perspective. If you look at it as measured from the bottom, what you'll notice is that Bitcoin kind of got ahead of schedule compared to the last cycle, and it needed to get back in line with the prior cycles. And the reason we said that was because the cycle before essentially did the same thing, right? Where it eventually it got ahead of schedule. The year that we saw rate cuts, 2019, Bitcoin faded back in line with the prior cycles. It then started to go back up. And then, of course, we got a landing. Now, if you look at, that was a recession, right? That was a pandemic-induced recession. If you look this cycle, it's been a little bit different. The surge occurred a little bit later on because also rate cuts occurred a little bit later on. And you can also see that it's now gotten back in line with prior cycles and it's starting to track those cycles. Now, you could always get a landing, right? At any time, something like that could happen, that it sort of just comes out of left field. No one's really expecting it, and it surprises people. That's what happened last cycle. But you don't have to get that, right? And it's not necessarily an investing strategy waiting for something like that. That's why I said just stay Bitcoin heavy until Bitcoin dominance hits 60%. And then start to diversify some into the altcoins because they probably will start to catch up a little bit. And as you can see, Bitcoin dominance has fallen quite a bit over the last few weeks. So that is the cyclical view, right? That's the cyclical view. And Bitcoin's really continuing to follow that cyclical view. So In order for Bitcoin to continue to push higher, though, into the end of the year and continue to follow the cyclical view, then arguably the labor market data needs to come in relatively okay this month. Okay. So I would say if the unemployment rate were to come in at 4% or 4.1, then it would likely favor Bitcoin to continue to go up into the end of the year. One of the things I've also mentioned before is that in 2016, the dollar rallied into the end of the year. If you go look at the dollar, we've been bullish over here on the dollar for basically all of Q4. And I said when the Fed cut rates in September that the dollar would likely rally into the end of the year. And you can see essentially this is where the Fed cut rates, September 18th, right over here. The dollar has been rallying. And I think it's going to get one final push into the end of the year. It's not, I mean, look, guys, it's not rocket science, right? I mean, I could be wrong, but it is, it's basically what we saw happen in 2016, right? Where the dollar put in these higher lows and it then put in another low in early December and then rallied on up into early January. Now, the long end of the yield curve, 10-year yield, also rallied back then as well, right? If you look at 2016, you'll see that the long end of the yield curve also rallied. So if the dollar is to rally into the end of the year, it would imply that the long end rallies into the end of the year. The long end has actually been getting a pullback recently, but I wonder if it's just repeating what it did over here, where it basically got sort of a early breakout, right, and then followed by sort of a pullback below the trend line, and then it moved up again. So I wonder if we're going to see the 10-year yield turn around here. So the way I see it is this. The unemployment rate comes in at 4% or 4.1, then it would favor the cyclical view to continue to prevail, right? It would favor it to continue to prevail and to take precedence and to not fade the cyclical view. As I've said, Bitcoin needs a reason to go down, not a reason to go up. Bitcoin just naturally goes up because people DCA Bitcoin, right? So it tends to go up for no reason at all. If it's going to go down, it needs a reason. And, essentially from March until August, the unemployment rate gave Bitcoin a reason to go down, right? Because the unemployment rate was accelerating higher. But ever since August, the unemployment rate was dropping or going sideways. And you can see that's where the low occurred for Bitcoin. It was in August of 2024. That low occurred, and it happened to correspond to when the unemployment rate stopped going up, and then we got a lower print. So if you're looking for a reason for Bitcoin to drop, you essentially would need to see the unemployment rate start to go back up. So I think if it's between 4% to 4.1%, then it would likely be a good thing for Bitcoin. Because if the coast is clear in terms of the labor market, then Bitcoin will likely use that opportunity to go higher. Now, you might think, well, if the labor market data comes in strong and the dollar rallies and the long end rallies, wouldn't that be negative for Bitcoin? And theoretically, you could have sort of an event like August where you get a quick sell-off if the long end rallies. But the counterpoint is that in 2016 Q4, the dollar rallied, the long end rallied, and Bitcoin rallied. It was altcoins that got left behind in December of 2016, not Bitcoin. So if it's 4% to 4.1%, then that would probably be a good thing. Okay. If it's 4.2%, I would argue that it's probably more so neutral, right? It's not good, but it's also not like the worst thing in the world either, right? I mean, it could just be some level of normalization. Now, if it comes in at 4.2, you could still see Bitcoin go up, but then I almost wonder if it would make sense to defer to sort of that 2016 view where it already kind of hit that year-to-date ROI, and it's just going to cool off for the rest of the year, right? If it comes in at 4.2, there's a chance that happens. But 4.2 is really not good or bad. It's just kind of, somewhere in between. It wouldn't be enough evidence to suggest that it's truly starting to accelerate again. But it's also would sort of leave a question mark as to whether the uptrend by the unemployment rate is actually over. Um, Obviously, at this point, there's not nearly as much wiggle room in the labor market as there was a couple years ago. If you were to go look at say job openings, and a number of other things, right? Job openings, they've dropped a lot, right? They're basically back to the pre-pandemic highs. So, and we're about to get this data, tomorrow, I believe. There's just not that a lot of the excess that was there is no longer there, right? Job quits is has dropped like a rock, right? People aren't leaving their jobs. If you look at hires, people also aren't really getting hired either, right? Hires are down, job openings are down, job quits are down. So the labor market has really loosened up recently. But it's also down? Initial claims. So what that suggests is that layoffs really aren't that high, despite what you might read in the headlines, right? They're really not that high. But if you look at continued claims, you can tell that once people do get laid off, they're having a harder time finding a new job because hires are down, people aren't really quitting their job, so there's fewer job openings, and then continued claims you can see have been trending higher, meaning that people are having a harder time finding a new job whenever they do get laid off. So I would say, 4 to 4.1, good. 4.2 is kind of neutral, right? I mean, maybe Bitcoin would just wait until CPI data in a week or two before deciding. If it's any higher, right, than this, right? If it comes in at 4.3 plus, I think that would be sort of construed as bad, right? I think that would be construed as bad if it were to come in at 4.3%, because then it would suggest that this move here was just very short-lived and that it's just going to simply continue higher. So that's how I think it makes sense to view sort of Bitcoin short-term price action. Now, the reason why this stuff is important and the reason why we talk about this stuff is because, when Bitcoin stalls out, like it has been for the last couple of weeks, that's usually when the altcoin market takes advantage. And the reason for that is because when Bitcoin moves quickly, the altcoin market stands still, right? The altcoin market bows to the king. The altcoin market typically would not dare move when the king is moving. And so if Bitcoin is stalling out, that's normally when the altcoin market starts to make its move. And that's why when Bitcoin dominance hit 60%, which was my target for the last 3 years, I said it was time to diversify into other coins because a lot of them probably have some catching up to do. Now, that doesn't mean they can't get hit if Bitcoin goes down. It's important to understand what's going to move the needle for Bitcoin. What's going to move the needle for Bitcoin is the labor market, right? So if the unemployment rate comes in low, then what you're likely going to see happen, maybe about mid-December or so, is Bitcoin start to move up once again. If it comes in high, if the unemployment rate comes in high, then maybe you end up getting the landing after all. And then people start to then get fearful that there's still a lot more to go with the unemployment rate before it's truly topped out. So that's where I currently think, that's kind of what I think about the market at the current time as it relates to Bitcoin. Now, there's other things that we can talk about, obviously. It's not just the unemployment rate. It's not just, what's Bitcoin doing here. There's other comparisons we can make as well. And some of those comparisons I've talked to you guys before about. And one of them is the comparison between Bitcoin and the QQQ launch from 22 years ago, right? Or, I guess it was more than 22 years ago. It was like 25 years ago. If you guys remember, the QQQ was launched in 1999. I'm sure every one of us remembers that. I was 9 years old. Of course, I was glued to the charts. Obviously, I was not. Um, but if you look at the QQQ launch, I've been following it this year, and it's actually been really helpful in sort of paving out a path for Bitcoin. It launched at 48 uh, or so, and Bitcoin launched at 40. The ETF for Bitcoin launched when it was 48K, and essentially you can see that the QQQ also had sort of a low in August. Now it was a higher low compared to May, but it was still a drop in August, and then another drop sort of in mid-October. So August and then mid-October, you go look at Bitcoin, and you'll find something very, very similar, right? It launched when the ETF launched, when Bitcoin, it tagged 48K, it had a drop in August, and then it had another drop here in mid-October. So it seems somewhat familiar. Now, what ended up happening with the QQQ back then, it also had trouble breaking through the 100 milestone. So for the QQQ, it was 100. For Bitcoin, it's 100K. But it's all, it's just, add some zeros onto the number. But you'll see here that the QQQ, it took it about a month or so to really break through. It went up to 96 and then had a drop to 79 or so, or back to 80. And then it went up to 97 or almost 98, and then it dropped back to 83. So it did take it some time to get there. What's really interesting, though, is that it did eventually break through, and it ultimately went to 120. The reason why 120 is interesting is because if you go back to Bitcoin's year-to-date ROI and you compare this halving year with the average of prior halving years, what you'll notice is that it would put the year-to-date, if it is able to track the average of prior halving years into the end of the year, it would put it at 3x from the yearly open. Now, the yearly open was around 40K, right? So 3x from the yearly open is 120K, which is exactly where the QQQ went 1 year after it launched, right? It launched in March of 99, and then it rallied up to at 48 or so, and then it rallied up to 120 about a year later. In fact, it almost lines up perfectly, and sometimes it makes me feel like we're living in a simulation, because if you look at this, it topped 54 weeks later. I'm not suggesting that Bitcoin has to find a market cycle top 54 weeks after the ETF launch, but you could get a correction at that point. And one of the reasons for that, perhaps it's the people that bought the ETF when it first launched. They find themselves up 3x. They decide they're in long-term capital gains territory. Why not take some profits, right? So that's 54 weeks later. What's really fascinating about that is if you look at something very similar for Bitcoin, what you'll notice is that 54 weeks after the ETF launch happens to be the week of January 20th. Why is that interesting? Well, the week of January 20th is inauguration. The week of January 20th is when Gary Gensler is resigning. You have to wonder, does every good thing possible get priced in before the inauguration? And then once the inauguration actually happens, people are like, all right, now that the strategic reserve has been priced in, do we actually get it? And, it could be sort of the, maybe, some trepidation as to whether it happens or not that causes a potential correction in January. What's really interesting is, corrections, while it would correspond to a correction 1 year after the ETF launch, another thing to note with Bitcoin is that it actually does typically get a correction in January of post-halving years, right? If you go look at January of 2021, you can see that there was a correction by Bitcoin. If you look at January of 2017, there was a correction by Bitcoin. Now, if you measure out those corrections, they were, somewhat substantial, not like that bad, but 35% there. And then in 2021, about a 32% correction. Now, you could argue that we're here, right? You could argue that we're here. In fact, the week of November 23rd, last cycle in 2020, also had sort of a small red candle, a small candle body with a long wick down. And if you look here, you can see almost something very similar, right? A small candle body with a long wick down. I guess the main difference, though, is the following week, Bitcoin basically just went up, whereas this week, we can already see that there actually has been a bit of a correction. So it's not necessarily the same thing, but it is interesting to sort of line those things up and to figure out, to see that seasonality on the chart, right? You go measure the year-to-date ROI, you can see that seasonality on the chart and argue that that's essentially what happened, right? In November of 2020 is that Bitcoin hesitated for a few weeks, which is exactly what is happening right now, right? It's hesitating. And arguably the reason it is hesitating right now is because it's just simply waiting for the labor market data to come in. If you go look at the macro dashboard over on Into the Cryptoverse Premium, and you just look at all the things coming up this week, you have so much labor market data coming in, right? You got the employment level, job openings, job quits, hires, layoffs, and discharges all coming in on Tuesday. On Wednesday, you got manufacturer new orders, you got non-farm private payroll employment. On Thursday, you got initial claims and continued claims. And then on Friday, you have average hourly earnings, average hours worked per week, on the unemployment level, as well as initial claims per state, continued claims per state, the civilian labor force level, et cetera, et cetera, et cetera, right? So you have a lot of labor market data coming in this week, which is what Bitcoin tends to look at, right? It tends to look at that labor market data. If it comes in okay, then Bitcoin tends to go up. If it comes in bad, then Bitcoin tends to go down. That's the way it historically has worked. So what I would say, again, if the labor market data comes in okay, then it would favor Bitcoin to rally into the end of the year. And if it does rally into the year, you might actually see Bitcoin dominance go back up. That doesn't mean it's going to put in a higher high. It could be a lower high. But if the unemployment rate does come in really low and everything comes in low, it likely means the long end rallies. It means the dollar rallies. And if those two rally and we're still risk on, then it would likely mean that Bitcoin would sort of catch a tailwind from that, and Bitcoin dominance could in fact bounce. That's essentially what happened in 2020. But if, on the other hand, the labor market data comes in very weak, then it would call into question those views on the dollar, it would call into question the views on the long end of the yield curve, and thus it could call into question, the cyclical view of Bitcoin. The main things, I always want to look at what are sort of the reasons to be cautious, not as a reason to not be invested per se. As I've said, I've just been, for the longest time, I was just Bitcoin only. I've only recently diversified over the last couple of months or so as Bitcoin dominance hit 60%. I wanted to make sure I sort of captured some of the gains elsewhere in the market from some lagging coins that hadn't really moved. As a lesson, you don't have to sit in altcoins for 3 years during a Bitcoin dominance rally, right? You can just stick with Bitcoin until Bitcoin dominance shows signs of topping and then diversify. And that way you preserve the Satoshi valuation of your portfolio. But it's always a good idea to sort of look around and see, what could we be missing? Is there any chance that you get a correction before January? Right? Is there any chance that something like that happens? And anything's possible. Anything's always possible. Yes, it's possible that you get a landing. We did get a landing last cycle. The main things that I'm looking at that give me a little bit of pause, but as long as the market doesn't go up too quickly, then it's not that big of a deal, is if you actually look at the extension. Well, if you look at the bull market support band, you can see that Bitcoin is fairly extended from it, right? But if you actually take the natural log of the price over the 20-week moving average, it has gotten somewhat extended here. Okay. And the only reason I point this out is if you look at this chart and you look at sort of these lower highs by the extension from the price of Bitcoin from the 20-week moving average, you can see that whenever it hits this trend line, it tends to correspond to a correction. In fact, the last time we hit this trend line was back in March, and Bitcoin got a correction. Back when no one thought it could get a correction, it then got a correction. Now, 2021 would show you, late 2020 and early 2021 would show you that just because you hit the trend line doesn't mean Bitcoin can't go up, right? You could hit the trend line, get a little bit of a pullback, kind of like we're in right now, and then go up again and go to a higher price. Because the extension from the 20-week SMA, remember, you're measuring the extension from something that is changing. So as long as the 20-week SMA continues to go up, then the price would have to stay constant. Or even if the price stayed constant while the 20-week moving average went up, then the extension from the 20-week moving average would actually drop. Okay, so you have to be careful by taking too many assumptions from tagging the trend line, because sometimes you can tag it and get a correction off of it and then go up again a few weeks later, only to then go down, right? So you do need to be aware of that. That is something that I have thought about, and I think what it makes the most sense to do is just see where the labor market data comes in. I mean, if it comes in super low, like if the unemployment rate is low, that's probably a good thing. If it's bad, if it comes in high, it's probably a bad thing, and you might actually get a larger correction by Bitcoin before January. It's just that normally you do get a correction in January. Although you could argue that there's a lot of things in seasonality that haven't necessarily played out. I would say it maybe plays out about 70% of the time. The other thing that is still somewhat similar to March, although I do put less and less weight on it, is USDT dominance. And I'll tell you why I've put, or I haven't been focusing on as much as I was back in March. So back in March, I was noting that USDT dominance was hitting this long-term trend line, and therefore it made sense to be cautious, and we would likely get a correction, and you can see that we did. Now, it's possible that we get a correction again, but what you'll notice is that we've arguably broken beneath this trend line, which is something I said that would eventually happen, right? It has to happen eventually. The reason it has to happen is because if you extend this trend line to, for eternity, then eventually it would imply the USDT dominance, if it never breaks down, eventually goes above 100%, which doesn't make sense. So at some point, the USDT dominance trend line has to break, okay? Right, it has to, and you can see that it has. I guess you could redraw the trend line to connect these wicks down here, but I mean, even then, I don't think you're drawing it in a way that doesn't look like it's broken down. I think, it's sort of, you draw the trend line like this, and then you see that it's broken down. So what I think you do at this point, and I said this is likely going to happen, is that you then start looking for horizontal support levels, right? Rather than the trend line, you start looking at horizontal support levels. And on the weekly, you got one right here where the USDT dominance currently is. You also have one a little bit down at 3.8%. But the reason why this thing is becoming, I'm not saying it has no relevance. It certainly does, but the reason why I haven't been, as loud about it in November as I was back in March was because the USDT market cap is absolutely going parabolic right now, right? I mean, if you look at USDT market cap, it's basically just going straight up, right? You see that, right? How it's just going vertical almost. A lot quicker than it was back over here in March. So let me pull it up on a let me just pull it up right here. So if you look at it, I mean, it's been, just at the beginning of November, it was at 120 billion. Now it's at 134 billion. So what does that mean, right? What does that mean? Well, essentially what's happening is that USDT dominance isn't really going that much lower over the last few weeks. So why is it not going lower even though total market cap is exploding? The reason it's not going much lower, it's been slowing down, is because the USDT printer is on, right? I mean, it seems like every single day almost, not every day, but every few days, there's another billion minted, okay? So if you're going to keep minting a few billion here and there, right? What's a few billion among friends? Then it's going to make it hard for USDT dominance to go too much further down, because if you just keep minting more of it, right? Another billion here, another billion there, the market cap of USDT goes up. And if the market cap goes up, then the dominance goes up. So the only way the dominance goes down is if the market cap of the entire asset class without USDT is going up quicker than USDT itself. And while that has been the case for the last few weeks, you can see that the pace at which it's outpacing USDT growth has been slowing down. Okay? So I just want to point this out, because if there is a correction, whether it be, say, in December from the current levels, or whether it's, say, in January, potentially, a year after the ETF launch, and maybe at a higher, it could be at a higher valuation, right? It could be a Bitcoin could be above 100K, then, you could get a very strong move by USDT dominance back up to the upside. Okay, so I would keep an eye on this. It's been hanging out around 4%, just a little less than 4%. Um, if it does break down again below, say, 3.8, then I guess you go look at the November 2021 high, and that's a lot lower, right? That's a lot lower. And so I don't really know the best way to sort of look at this trend, and I don't know exactly how much lower it could go, but it is something to at least keep in mind. All right. If there is a correction by Bitcoin, obviously it would bring the altcoin market. It would sort of rein in the altcoins. All right. I would speculate that if there is a correction by Bitcoin, we might actually see Bitcoin dominance go back up. Not necessarily to a higher high, but we probably would see it go back up because QE still hasn't started yet. Right. And so I wouldn't be that surprised if dominance went back up if Bitcoin did get a correction, or if Bitcoin got a rally above 100K, then you would likely see dominance go back up. In fact, if you look at Bitcoin USD and you overlay Bitcoin dominance onto the chart, one of the things you'll notice is that last year, around the time that Bitcoin broke out, right, you can see that Bitcoin broke out, Bitcoin dominance hit a local top, right? And here again, you can see that Bitcoin, once it broke out, Bitcoin dominance basically hit another local top. Now, back then, it still wasn't the top, right? I mean, you can see that, just a few weeks later, maybe a month or two later, dominance went up and put in a higher high, and it ultimately just kept on going up. So, but dominance didn't really start to move again until after Bitcoin sort of got out of this consolidation area, right? While Bitcoin was consolidating, dominance was generally going down. But then once Bitcoin broke out again, dominance started to go back up. So 60% dominance was always good enough for me to start diversifying. There's always a good chance that Bitcoin dominance has in fact topped. And I said that for a long time, that 60% was the milestone. And certainly with this drop by dominance recently, it sort of gives a lot of, credence to that idea. And so in fact, if you look at Bitcoin dominance excluding stablecoins, I mentioned the two paths are either just down now or break out and then go down. I didn't really care which one. I was going to diversify either way. You can see that it looks like it's just immediately broken down. Right? And now it's back below the wedge. Now, there have been times where it was below the wedge, but this is the first time we've really had a weekly close below it. And you can see that dominance hit the top of this trend line, which was always the target, excluding stablecoins. That obviously, it always corresponded to 65%, and including stablecoins, it corresponded to 60%. And the reason I came up with 60% was just sort of assuming that dominance would basically return to where it broke down from. And that's exactly what it did. And the other reason was to say, look, if you look at the fib retracement tool, last cycle Bitcoin dominance topped out at the 618 fib. What if it just does the same thing this cycle? And you can see that it basically went up to the 0.618 fib. Now, it's basically pulled back here to the 0.5 fib. So let's see what happens here. And my guess is you're going to see a reaction by Bitcoin following the labor market release, which is all going to be happening this week. So, to sort of summarize, if I can, if it's good labor market data and it sort of takes away concerns about the labor market and it sort of distills any fears that people might have, then it's more likely to see Bitcoin continue to show strength. If the unemployment rate comes in higher than expected, then, or let's say it comes in at 4.2, that's maybe considered somewhat neutral. I could see it going either way, honestly. I mean, I don't really have if it's 4.2, I don't really have a strong opinion, right? If it's 4 to 4.1, that's good. If it's 4.2, it's not really good or bad. It's just kind of neutral. If it's 4.3 or higher, I would argue that's bad. You don't want to see it go up 0.2, right? You don't want to see it go up 0.2. If it goes up 0.2, then you're basically back to where we were over here, all right? And if that happens, then you could see a rejection off of, say, that 3.8 to 4% USDT dominance, right? You could see a rejection off that level, and then we sort of regroup, and then we try again later on. So those are my general views on where the market is right now. That's sort of the dubious speculation for the video. I don't think I had anything else to mention. I think that was essentially it for this video. I don't really think there's any other um, things to go over. Let me just double check before I sign off here. Yeah, I think that was mostly what I wanted to cover. Obviously, there's a lot of other charts that we could go through, but in the interest of time, why don't we just go ahead and end the video there? So, hopefully that gives you something to work with, right? Bitcoin's likely in a holding pattern until we start to get that labor market release data, which is going to start Tuesday through Friday. Okay, Bitcoin will then look to see where that data is, and then make its decision on the next move. I've tried to outline. I mean, it's a lot of just if-then statements. No one can predict the future. No one has a crystal ball. It's all about having a plan no matter what happens. And that's the way I think you navigate the cryptoverse. I just use the risk levels rather than try to predict exactly what move's going to happen. I give you the dubious speculation just for fun, right? It's not an investing strategy. It's more so just for fun. But remember, I just stick to the risk levels, and I don't even try to overcomplicate it beyond that. But if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. See you guys next time. Bye.